Good morning. Dan Fitzpatrick here at Fitz Factor and StockMarketMentor.com. After the Fed's pause yet today, combined with the we aren't done, seriously, we're really not. No, seriously, we're not. That's what Powell basically said. The market's kind of taken a rest today, just for a bit to get everything kind of sorted out. But all things considered, and there are a lot of things to consider. Yesterday's action was actually pretty tame. From top to bottom, the S&P stayed in a 1.25% range. And since then, since those intraday lows from yesterday, the S&P has retraced almost all of the sell the news decline from yesterday. And frankly, my bet is we'll probably go higher today. Now, it's a bit surprising that Powell was so adamant that we are not done, yet only a bit, really, when I think about it. Because if you just remember yesterday, I and basically just about everybody that watches the Fed and pays attention to what they're doing and saying, we all expected a pause and a statement that they weren't done. So when I think about it, it really wasn't surprising. Maybe I was just hoping to be surprised by something good, like, hey, we have paused and maybe we'll do one more time, but maybe not. Instead, he was pretty adamant that, here comes the pain, just not until next month. So I think the market was kind of similarly, surprised, not surprised. And that's why the reaction was actually pretty muted. Now, I suspect that the market, even though it will probably go up today, I suspect that the market is kind of due for a rest. So it's important to understand that the chart always tells the truth. Guys, I'm just guessing, seriously. I always look at the chart, and then my approach is the trend will not end until it does. And until it does end, the trend is intact, so why really overthink it? I would actually just prefer to underthink things. Look at the chart and say, golly gee, which way is the price going? Understand how you can do trends, how you can follow trends. There are a lot of different ways to do it. And it is important, if you're going to be a successful trader and investor, it's important to be able to spot when the trend is kind of slowing down. And maybe it's time to at least take a little bit off the table. You got some great profits, so let's reap the reward of you taking that risk. So here's the deal as I look at the market just over the last few weeks. We've been seeing a lot more participation in stocks just so far in June, and we're just halfway done. We've seen an increase in the percentage of stocks above their respective 40-day lines jump from 31% up to 62%. Okay, that's a 100% increase. Twice the number of stocks that were above their 40-day moving average are now above it just 2 weeks into June. Now, that's a hell of a lot more stocks than NVIDIA and Microsoft and Apple, Netflix, stuff like that. So we are getting some broader participation. But when you think about it, what's really changed with respect to the economic and the monetary backdrop? Not much. Okay, with further hikes on the horizon, and it was unanimous among the bankers and economists who sit there in their conference room eating bagels and bran muffins. It was unanimous that they're not done, that they're going to keep raising rates. Some want to raise them a lot. Who knows? They're saying that the data, they're just pausing to see what the data tells them between now and next month. And then they'll kind of make a decision. But as Powell says, July is a live meeting. I don't know what you're going to have other than a live meeting. Maybe they all just send mannequins in their place. So he's just saying that next month, might be a different story. They need to just see what the data shows them. Now, one thing to be mindful of is all of the data that the Fed looks at, it's all lagging data. It has a significant latency period to it. And so there's also pretty broad knowledge among people that have been around for a while that the Fed's actions actually take about 6 months to kind of work their way through the economy. And so when you think about this is the first pause I think the Fed's had in 15 months or something like that. So when you think about the steep trajectory that they've been raising in, and look at the implosion of some of the regional banks, look at inflation, which happens initially with rates rising, believe it or not. When you look at that kind of thing, you can see that that the Fed is really kind of day trading on 20-minute delayed quotes. I could criticize that, and I have many times, but at some point, you just got to look at it and say, okay, that's what they're doing. How do we make money on it? And so the way I think you make money on it is to recognize that, again, not that much has really changed. Money is still expensive. It's going to be more expensive. I think the market had been anticipating a one and done type of thing, which is why small and mid cap stocks were moving higher. And maybe they'll still do that. Again, we've had a doubling of the percentage of stocks above their 40-day moving average line. So maybe that'll continue. But I think one thing that will also continue is that the mega cap stocks are still going to work. You can see some rotation into other stocks. But guys, that doesn't necessarily mean that the rotation is going to come at the expense of these mega cap stocks. There aren't funds that are 100% invested in these stocks. I think the rotation is coming out of other underperforming assets and moving into the broader market, into these other stocks. So I have no idea whether the mega cap stocks are going to continue to outperform the market. I don't think they really have been lately, but they still just keep moving higher. But what I don't think is going to happen is these mega cap stocks are going to have a big correction. I think they're not. Now, for long-term investors, I think any dip in the market's a buying opportunity. If you look at the weekly chart, say on the S&P 500, you'll see a pretty pervasive uptrend that has a ways to go. I think the S&P is going to hit new highs this year. I've been saying that for a while, but I'm not dislocating my shoulder to pat myself on the back. It's really not that much of a call. We're just 9% below that level already, and we're not even through half of the year. So I pretty much think that's a foregone conclusion. Now, one thing, you hear every year in May, sell in May and go away. Okay, that kind of pithy statement is really just kind of lazy language, but then that's our culture. We like to have lazy language. Diversity is our strength, stuff like that. But they're not really rules. They just make you think that you sound wise, but actually, you really don't. So if you're not on this train, candidly, you're missing one hell of a ride. Okay, so that's my comment for today. Now, to our members, I'll be covering all our active trade ideas later this morning, and we've got some real monster ones going in the usual suspects. So, but for now, here's a suggestion. I want you to watch Shockwave. The bulls really put a big move on the bears yesterday morning, but the stock ultimately just settled in for a 1% advance. Now, when trading volume is 1.2 million shares and the average trading volume is just 400,000, that's institutional buying. And institutions aren't day traders. Okay, they're not. And so they're buying, and they're buying for a reason. It's looking to me as if the squeeze is just getting ready to pop. I got my alert set at $300, and it needs to blast through that obvious level before I'd be willing to buy. Okay, so anyway, that's all I got for you now. Have a great day. And if you are not a member of Stock Market Mentor or have not even tried the free trial, you get 14 days on me. So it's really a pretty good trade for you. We're doing really well. You get a lot of instruction from me and Scott McGregor. We got some great traders in our forum, and I'm also presenting live trading ideas, active trade ideas that we follow from entry to stops to exits. So check it out.